everyone, and welcome back to another episode of Foxify Radio. Today we're joined by Andrew, also known as Apex Trades. Thanks for joining us, Andrew.
No, pleasure to be here. Thanks, Alice.
Good, thank you. It's a really interesting episode today. We're going to delve a bit deeper into actually trading. And Andrew has been trading. How long have you been trading for now, Andrew?
On and off, probably since about 2016, I'll probably say. Okay. But more seriously in the past 2 or 3 years.
Yeah,
I would say.
Yeah. So quite experienced, which is great. So talk to us a little bit about yourself. How did you get into crypto? How did you get into trading? Sort of what led you to where you are?
Well, as I say, I started about 2016 trading, and you know, it's one of them, isn't it? Everyone has these dreams of leaving the day job, being dazzled by this idea that you can sit behind a desk, read the chart, and become a millionaire. And so I'd be lying if I didn't say that was the same thing that kind of got me into this idea that I could trade and stuff like that. It's a very wrong principle, and we'll go over why that's the case shortly. But yeah, I started trading about 2016. I opened an IG account. I think I was trading. I think I put like £200 at the time, and just tried to trade with Tesla stock. But it wasn't. It was like a buy and hold kind of idea where you watch it and then hope the price goes up and then maybe sell out and then buy something else and do it that way. But I quickly realized that, like with everything, you get a bit greedy too soon, and you kind of, you start with that £200 and then it was like 150, and then within like 3 days it was gone. And like most traders, I thought trading isn't for me, and I got out. And that was about 2016. And then I found myself kind of just always being drawn back into it and wanting to have another go and test myself. And to the point where each time I'd have a go, I wouldn't really get any better. It's because I didn't see the signs each time I'd do this. And I probably lost maybe about £1,200 over maybe about 6 months or something like that of dipping in and out of trading. And kind of round about the time, it was funny because like I knew Bitcoin was a thing, but it was always this idea. You'd see Bitcoin and it was like that, it's so wavy. And it was almost like this abstract thing of like, how can anyone make money on Bitcoin? Because it's just too volatile. You can't, it's not like a well-established stock like a Tesla or even like the S&P 500, where in my mind, it's very easy to, you can kind of predict, if news events will go well or whatever, when financial things were coming out about like a specific type of company, you could maybe try and jump in on that. I always thought Bitcoin was this, like, obviously clearly didn't understand a lot about it, but just this scary world where you almost guaranteed to lose your money. And so I think it's probably maybe moving a bit further forward into the last few years, obviously got into DeFi. And I think I've done something really stupid. I heard a lot of noise about Strong at the time. And I remember, actually, it was Mr. Pelton who got me involved, because I started watching his channel. And he's a great guy, by the way. I'm not saying anything was bad about it, because he was just giving advice. But I remember I got a loan to buy a Strong node, but I bought it right at the top. And then that was gut-wrenching to see it continuously drop down and down and down.
Yeah.
But my stupidity didn't stop there, because I then took another loan actually for Thor nodes. I ended up buying an Odin node. And again, you're taught to just keep compounding these things. So it was like node season. That's when I really got into DeFi. There was a saving grace though at the time. I was always, because the central exchange that I used was crypto.com. And I was always keen to see what they had on their chain. And this kind of little obscure one called Cronodes. Again, it was still node season, but I got in really, really early. The price of a Chronode token, I think it was like $2.63. I think I bought like 5 nodes at the time. It wasn't a lot of money. It was like $200 or something like that for whatever it was worth. And it's done the same thing, compounded. And the price over the next kind of 3-4 weeks went from like $2.36 up to about $64 in price. And it was netting about $1,200 a day for about 3 weeks, something stupid like that. It was amazing. So that was like that was kind of one of the better news stories. And then, of course, you've got a bit of capital to float about then. So you start looking at what else is out there. And I got into Sphere. And like you, I was lucky enough to get on the whitelist at the time and got the max allocation. So I got that. I think I put $1,000 in, and at its height, I remember looking, it was like $40,000 at one point in terms of what that had netted. I didn't take it at the top. I wasn't that clever. But then I used money from that to then invest in MTB. And MTB's just obviously always been amazing. I think, again, that started at 0.0025 and never really dropped below, like, you know, never came down to the entry level for what you could get.
No, I don't think we ever quite reached pre-sale. I think we dropped ever so slightly before below the launch of 003, but yeah, we've never gone below pre-sale. And that was after, like, you know, the big Terra Luna scandal and things like that. So held pretty well considering.
Yeah, so I had a couple of ups and downs just generally in the DeFi space. Certainly, you know, Chrono, Sphere, MDB well outweighed the kind of the losses that I incurred, let's just say, on Strong and Thor. But that was all right. You kind of, I think in this space, you need to take a few scars in order to learn from some of these. And a lot of it is education. And so, you know, Jordan, while all of this was happening, I was always keen to learn how to become a better trader. And so, you know, I think, when did I open a Bybit account? I opened a Bybit account maybe, like, again, a year ago, maybe. But before that, I was trading on, again, IG, but they only had limited amount of kind of cryptocurrencies you could trade. Now, I only exclusively trade BTC now anyway. And so that's probably a short introduction of how I got into trading. I've always had a kind of affinity with this idea of being able to make money by watching charts, but also trying to look at what's out there on the DeFi space. So kind of whistle-stop tour.
Yeah, no, it's really interesting. It's interesting that you said, when was it, 2016 when you first started, and actually you lost, you know, your money relatively quickly. And I actually saw some really interesting stats recently, and it was something like 80% of traders stopped trading within the first 2 years. But before that sort of 2-year period hits, you get this huge amount of traders who keep failing, and they keep trading despite having made no profit. They're not doing, like, obviously with trading there's wins and losers, right? You can't win every single time, but people that were winning no times, and they keep doing it. And it's almost like this belief that because there's, you know, some technicality around it, if you're doing it based on sort of the analysis and that side of things, that one day it will work out. And it's crazy, really, because I think if I'd lost every single trade and I'd never been able to, you know, say, actually, I did this right and I did this right, I would either completely stop, or I'd really try and educate myself, actually. Which it seems
like the way I've come to think about trading in general, you know, it's very much a profession, let's be frank. And, you know, I learned how to play the guitar many years ago. And so there's a lot of analogies to playing the guitar, because you know, it is a kind of what happens. You pick up a guitar and you learn like 5 basic shapes, right? And you think, okay, it'll take you a long time to master those with the muscle memory in your fingers, and you kind of get to a point where you can kind of just navigate around the basic kind of neck at the bottom. And then what you do then is you learn how to do barcodes, and you've got to build all this strength in your finger to do barcodes, and then you start mimicking other people's songs, right? So you'll play Oasis, or you'll play, you know, I don't know, any song. You start playing other people's chords. The problem is there's no relationship between what you understand about music versus you're just copying someone else, right? And then you start to get this bit of epiphany where you think, you know what? Let's understand a bit more deeper about the theory. And you start understanding like scales, circular fifths, all these things that help you understand the theory of music. And a big problem with guitar, and that takes years, by the way, that's, you know, a lifelong thing that you're always trying to get better. Practice, theory, everything that kind of coalesces together. But it is what a lot of people do when they pick up a guitar. They pick up a guitar for the first time and they realize they don't sound like John Frusciante, from the get-go. And then the guitar just sits in the corner and gathers dust. And in many respects, that's exactly what happens with trading. But the problem is money's on the line then, because no one wants a paper trade because you don't get the same emotions, you don't get the same kind of thrills and spills. It's just no point. So you put a few £100 or whatever, and you just trade. And when you first come into the market, this is exactly what it's exactly what the market is geared to do, is to whip your ass. Basically, you put a bit of money in, you look. The first thing you gravitate towards is support, resistance, trend lines, triangles, patterns, wedges and flags, and all these kind of terms that is very introductory level when you first get into trading. And then you add on indicators, and then what everyone then does is they run to the next best indicator that's going to tell them when to buy and when to sell. And it's the biggest problem, right? Because what I've come to believe in trading, and it took me a long time to get here, to be completely honest, is everything within trading is all about manipulation, right? I always think about this. If you think about the price of anything, like we'll use BTC as an example. The price of BTC will be determined by the sellers and the buyers about where you're prepared to buy and sell at a specific price point. And so you've got to say, okay, well, if people are just buying and selling at what they believe is a price that's fair, how do we get these patterns that keep on always appearing? How is that happening? Because surely it should just be random. If I'll buy at one price, you'll sell it at another price. How do you understand what fair value is? And so it's always struck me like we can't keep seeing these like triangle patterns, and it'll hit a point and it'll reverse, and all of a sudden it's kind of getting smaller and smaller, or it'll keep on going to a certain point, but it's always like very patternistic. And I think it's too random, that. And so that was just something that I used to think to myself, there's something else under the fabric of trading that brings these things out. So what is that? So that set me wheels in motion about understanding the two most fundamental things that I think every single trader should learn, even before they do patterns and they try and do support and resistance and all this kind of stuff, is understand two very key concepts. Number one, what moves price? I'm going to ask you, actually. I don't want to put you on the spot. Don't worry if you don't want to answer this. I'll answer it for you if you want. But
I'll do my best.
What moves price? So you look at a chart and prices at a specific price point. What effectively moves that price either up or down?
Well, from my perspective, I would guess buys and sells. Obviously, there's a bigger picture, right? There's like circulating supply, there's market cap, etc., etc. But on a real basic level, I just for clarity, anyone listening, I don't trade.
Let me explain.
I do invest in crypto and DeFi, but I don't actually trade it. So that would be my answer to that.
So at its most basic level, right, it's liquidity, right? And that's the key thing. So, let's say BTC is currently at 27K right now. And within any order book, you have things called tick value. So that's every price increment up a chart or down a chart. And so in each price increment, there's what's called resting liquidity. It's the order book. It's a limit order, as we would know it in the trading world. So realistically, whenever you've got limit orders at specific values in the chart, if a participant comes in and buys liquidity, let's say we've got 3 Bitcoin ready to be traded at 27K on an order book. If I buy 10 Bitcoin at that price, well, there's only 3 Bitcoin at that price. And so the price will move up to the next tick value and see what liquidity is there. Now, there may only be 2 Bitcoin resting there. But remember, we want a 10 Bitcoin buy. So we've just bought 3 Bitcoin at 27. We've just added the other 2 from the next tick above. That might be like $27,010 or whatever. And so what price does is price will move based on what level of liquidity is at what tick value. And if there's more, if your initial single buy is more than what's at that current level, it will naturally move up. And so the thing that you start to realize is it doesn't matter at our level. We're not like moving massive quantities of Bitcoin. Ours are relatively small, but bigger players, whales and institutions, the way they move money, they might do like 1,000 Bitcoin buy. And so what's really important to understand there is that if liquidity is low at a specific price, then if they want to buy if they want to buy a thousand Bitcoin at 27K, they're not going to do it in one buy simply because the liquidity at that level is too low. And so what they think they're buying at 27K is 1,000 Bitcoin. Actually, the average of that moving up, because they'll have soaked up all the liquidity from the above order book, might be that they get the price actually at 27,500 as an average order, rather than what they think they're getting it at, which is 27. So a lot of the times, what the idea is really they are trying to focus their buys right where liquidity is dense, where there's a lot of liquidity, where price doesn't move that much, because where there's a lot of liquidity being traded, that's the best place for big institutions and whales to be trading at. So you'd often see, it's one of the first things, and if you want to take anything away from this, is to understand volume weighted profiles. So whereabouts on a chart is the most volume traded over the entire Bitcoin price. So what I tend to do is I'll pick up the whole chart and go right back to the start of Bitcoin's inception, and I'll put on what's called the visible range volume profile. It's the only indicator I use. But what it'll do is it'll show you exactly where most volume is traded at every single price point. And the reason that's important is psychologically, that's where a lot of traders will trade in and out, because on a chart, if you look, you get lots of consolidation around these specific areas. And that's great to know, because that's where the big money is going to be moving. And essentially what eventually happens is, when enough liquidity is being built or trapped, you'll see this big spring effect. So it's like a coil spring where, the liquidity is being built, the order book's getting, full, and then the price will just shoot up or down depending on which way. And that's the thing, you just don't know which way it's going to go. And so it's a very key concept to understand that actually, don't focus so much on support, resistance, patterns, because whilst at some point you'll get one or two of these that'll come good and it's great, it's really they're designed to trap you into thinking that's where price is going to go. And oftentimes what you'll see is, as these patterns are being formed, and it only takes 2 data points to form a trend line. If 2 dots line up, well, you can draw a line, and then you think, okay, well, when price comes back up to that line, I'm going to short or whatever. But more often than not, you'll see that price will spike well above it, and it'll be a swing pattern failure. It means liquidity is being built up there. Now, why would liquidity be built at that specific area? If you've got a trend line where you've got 3 points on a chart where the price is hit, every time that someone does that, the stop losses are going to be very close to that line. You're going to have a lot of people who get greedy and do 100x leverage, and 100x leverage actually gives you about 80 basis points. So if you, just to use that 27K again, if you buy, or if you put an order in at 100x leverage at 27K, price only has to go to 27,080, and you liquidated, it's 80 points before you lose whatever you put on the line for that. So from a market maker or a liquidity provider's perspective, or a whale, they know exactly where liquidation levels are. They know exactly where stop losses are. And so remember, for them, they want to trade where liquidity is at its highest, because they don't want to get price impact. They don't want to get slippage, all of that kind of stuff that's important. And so that was a big thing. That was like the light switch. There's a bit of a light switch moment when I started to realize that actually it's not really about patterns. Patterns are more about inducement to get traders into committing, orders, buys or sells at these kind of key locations. And so I think it takes a bit of time to kind of get to that realization, but that manipulation is what we see everywhere in the chart. You only have to open up a chart and you can see, we're all humans. As soon as you look at a chart, you notice, you look at the patterns, you go, okay, I can see that wedge is starting to get tighter, and you draw your lines. And the way I see it is actually not that there's a pattern, but I'm looking for where the liquidity would be, the rest in liquidity. And that's where I'm looking for. So my orders, if I'm doing a short or a long, I'm aiming for the place where stop losses are going to be, where high leverage is going to be much higher than what just the line of the support would be. And then there's other things that, we could get into about, like footprint charts, maybe a bit more too technical for this specific session, but there's ways in which you can understand when traders are trapped. and so it's more of an advanced tool. But I would say that's probably my best advice is to think about, and that is a nice takeaway here. If you have an idea on where you want to put an order as a buy or a sell, and then you have your stop loss, convert your order to your stop loss, and then put a new stop loss above or below that, as it were, and you probably find you'll get a lot more success without getting stopped out on that. So
super interesting.
Lots of information to absorb there.
Yeah, and I was always aware that market manipulation is a thing. It's something Danny talks about quite a lot, but not being a trader, I haven't really ever properly looked into it. Only on like a base level, and it's actually interesting actually, and it would make sense that they would perhaps view charts differently to what a more sort of novice or beginner trader would. Like for me, if I was going to try and trade, and this is why I don't trade, I would look at some patterns. I don't know many patterns like off the top of my head, so I would do some research into patterns. I'd open, say, Bitcoin's chart, and I'd be like, right, okay, and I would do that. I wouldn't consider anything else. I wouldn't think about any manipulation or is there a lot of liquidity in this situation or not? And actually that's really useful for somebody who is newer, who probably wouldn't necessarily think that way. So
well, it's like the most important thing that the takeaway that you need to understand is why. So ask the question of why first. Why is it important? Why is high levels of liquidity important? Because again, there's two versions of every chart. It's like if you look at a painting, a masterpiece, what I might see in a painting and what you might see in a painting are probably two completely different things. We may get different resonances from that and may have different thoughts. And it's really a chart is. It's like there's the chart that the newer investor will see, which is just candles and patterns, and they'll put all the kind of indicators on the screen and maybe get a bit crazy. And then there's like the veil underneath that where it's about, well, where's liquidity? That's all I'm interested in. I'm not bothered about where a triangle starting to come to an apex or anything like that. It's more about where will high levels of liquidity be, and then that is where I'm really interested in getting into a trade, because that kind of removes a lot of the noise that you see. And it's why actually for me personally now, and by the way, I've done everything that everyone else does, started off, lost money, as and I do the same things. You're looking for that indicator that's going to give you the magic sauce, right? Which is like, oh, you need to use this new ICT one, or this smart money concept one, or whatever. And like I would say every single time, if you can't go to a chart, if you can't physically go to a chart, look at it and go, right, where's my liquidity? Without an indicator, you don't need an indicator. Can you look at a chart and go, right, where is the liquidity? Where's it more probabilistic that price will go? And there's other things you've got to figure out, like kind of average trends and things like that. These are just kind of basic things that you understand, but where's liquidity? And so think of liquidity as just food for the markets. Another kind of funny thing to think about, I think of liquidity like the game of Snake, right? Remember the game of Snake on the Nokia where it was just a snake and it was going to get the nearest food? Well, that's kind of how I think about the charts and Bitcoin's. Like you've got to figure out the liquidity. You don't see that on a chart. You just see candles. You don't see where liquidity lies. You've got to infer a lot of this as well. So that's why there's some challenges even in that model. But that's the key thing. Figure out where liquidity is. Have that kind of base knowledge of understanding of what moves price and why it's important. The most important thing is, look, no one wants to get caught out on price impact. If you're moving large sums of money, you want to pay what you get for that price. You don't want to have to soak up shitloads of everyone else's liquidity at the top, and then all of a sudden your price is nowhere near what you originally bought it at. And so that's understand that. That's the first really key takeaway. And then thinking about liquidity as a way in which we soak up that liquidity, acts as a bit of a spring, and then it allows the price to really gain momentum. Because it is another point to understand as well. Once a huge amount of money is moved off an order book, then the order book gets really, really thin. And what that normally means is because there's very little liquidity on the order book, because it's just being absorbed by a huge move to the upside, it can come straight back in and come back down. So sometimes what you see on a chart is, on like a pattern triangle or whatever it would be, a huge big breakout, and then the price comes slipping straight back down. That's what we call a liquidity grab. It's where price will come up, absorb all that liquidity. The order book gets really thin, and then it becomes really easy to push that price back down. And then all of the kind of people who've got in on that move have made a few quids because they bought at the bottom, prices shot up, sold at the top, prices come back down.
Yeah.
It's a very key thing to understand outside of just the simple kinds of patterns that we tend to see on a chart.
Yeah. Okay. So you're talking about all these different views essentially of a chart. What software or what website, what program do you use? What do you recommend people use to get the most detailed view of a chart and liquidity, etc.?
Really good question. So, first, everyone will probably gravitate towards TradingView. It's become kind of de facto standard trading software. So TradingView is a huge community of developers of indicators. There's the community indicators, so people can develop their own. And then there's obviously the stock ones that TradingView comes with, all the kind of standard stuff that you'll see, has all the drawing tools, all the functionality. So it's kind of become the de facto standard. So TradingView is the platform. The problem with that is, majority of us will probably want to trade crypto. So there's not an awful lot of central exchanges that allow integration with TradingView. And so you tend to have a platform for your analysis, which would be TradingView, and then you would place your trades on something like Bybit or some central exchange that like Binance or Bybit or Qcoin or whatever it would be, obviously depending on your location in the world and whatnot. So they'll have a platform for executing trades. They'll use TradingView to do the analysis. But then if you want to get deeper and you want to understand more about liquidity, I've been using Bookmap. Bookmap basically gives you a heat map of the order book, and so it'll show you where the levels of orders are on a book. I mean, it pretty we couldn't do a screen share, but you can kind of, if you typical heat map, the red areas are where there's a lot of liquidity, and the white areas, so the blue areas is where there's a kind of nowhere, not a lot of liquidity, so to speak. So visually, you can start to see where liquidity is being put on an order book chart. So that's one great tool. But if you think about liquidity in that sense, the other thing you want to also understand is, okay, well, let's say we break past an area that, this entrapment has occurred, or this inducement of a specific value. How do you know when to actually execute your trade? Like, when do you actually place your short or your long? And so what I like to do then is I use Exo charts. Now, Exo charts is basically a footprint chart, so it will tell you on a candle by candle basis where the most volume's being traded. And the reason that's really important is because let's say you're looking at a 15-minute candle, it's showing you at each one of these price points whereabouts the most volume's being traded. So often what you find is, if it's a breakout, the majority of the volume will start at the base at the start of the candle, and then it'll usually continue. When more of the volume gets traded at the top of the candle, it traps a lot of traders, and so you'll tend to see that would be a liquidity grab or a reversal rather than a breakout. And so I know it's difficult me just kind of explaining it over, on a conversation, but so there's a number of tools. There's TradingView, which is your de facto standard analytics chart. There's things like Bookmap to understand liquidity, where liquidity is resting in an order book. And then finally, there's Exo charts about getting really getting tight with your orders and understanding how a candle by candle basis volume's moving.
Okay, that's really interesting. So yeah, three great tools for anybody listening who wanted to know, where they can look into this sort of stuff and start analyzing charts probably in a little bit more detail than maybe they were already, if they're not, an experienced trader just yet. So that's super helpful. What mistakes do you think people make, other than maybe not looking into the volume? What sort of other mistakes do you think are common, and how would you sort of advise people to work past them?
Greed, right? Let me tell you. So one of the biggest issues, and we all face it and we only realize after the fact, is, think about it like this, right? So a lot of the time, traders will get into a good trade and it'll be in profit, right? So that bit of it they might get right. But what happens more often than not is you get into a trade and then you present it with an option. Do I take profit or do I let the trade continue? And using that same idea that price is always going to, realistically, if we agree to indulge with that, price isn't always going to go one way because it's always hunting for where liquidity is. Then at some point it's going to come back and grab you, right? And so it's like, think about these two ideas. Number one, you're in profit and your notion is FOMO, that you miss out on the granddaddy sweep move that like you miss out on, versus getting stopped out and losing money. And I know which one I would feel better with every single time. I'd rather just take a small win and okay, that could have been 10x what I took profit on there, versus just getting price reversed back to you and stopping out. And so the thing everyone needs to battle with emotionally in the head is that greed that we all have innately, because we're all human, of that kind of fear of missing out, and just try to set yourself rules around what that would need to be. Might be 5%, might be 2%, whatever the move is. Always just say, okay, well, win, lose or draw. That's my thing. It's really difficult, though. I'm not going to lie. It is really difficult because you spend a lot of time analyzing the charts and thinking, where liquidity is resting or whatever. And sometimes it just doesn't do what you want it to do. So, get yourself some rules that you live by. And, if your rules don't work, that's fine. At least you've got a plan. But the FOMO thing will always come back and get you. That's number one. Number two, don't trade with high leverage. Again, it's a great way in which central exchanges allow that kind of greed to manipulate in, where you may get one or two really good moves and you get a lot of money off it. So you continue down that path, but ultimately what it tends to do is, obviously at some point it's going to come back and wipe you out. And if you're trading like anything from 50x above, your margin of error is so small, and the price of Bitcoin or whatever can move so fast that you will eventually get locked out. And it's that problem with when people are starting off small with a small capital, they tend to start with high leverage to try and build up, and then they don't tend to kind of reduce it down, if you like. So they're the two kind of big things most mistakes happen with.
Yeah, sorry, I thought you were going to keep talking.
No, listen, I did say to you need to kind of curb me if I waffle on a bit. So, but yeah, they're the main things. It's the kind of, set yourself some rules around what your profits would be. Don't move them. If you set a stop loss, don't move it. No matter what your head tells you. If you've done your analysis, it's there for a reason. And then the other one is try not to go crazy with leverage, because again, you will not be 100% right 100% of the time.
No, absolutely. I suppose for me as well, I feel like the greed thing does actually tie hand in hand a bit with an individual's risk profile, right? I think some people, like myself, for example, if I was up a tiny bit, I'm so risk averse that I would take my profit regardless, because I don't really like taking big risks. Whereas somebody who is a bit of a risk taker is, I think, less likely to take smaller profit, and like you say, whether it's a greed or a FOMO thing, wait it out essentially in the hope that it goes even higher. So yeah, I think that ties really hand in hand with an individual risk profile as well.
It's a really good point
if you're trading at all, you must be quite a risky person anyway, I guess.
Oh yeah, no, for sure. But I think one of the things, again, most people fail to realize is everything is the here and the now with trading. So you're always focused on the next candle and the next candle and the next candle, and you think you've seen a really good setup, and you'll never see that setup ever again. Problem is, trading's 24/7, Bitcoin's 24/7. The thing's always moving, and so there's always a new opportunity right around the corner. So if you miss out on an opportunity, guess what? Next one's coming along in 10 minutes time or 15, 20 minutes, whatever it is. So that's another thing you've got to battle with as well, is like, I've missed out on this opportunity. I'm never going to get him to move like that again. You will. You just need to be patient.
Yeah. Have you found it difficult? Obviously, we're both in the UK, and I feel like the US markets have a big impact on the crypto markets, and a lot of that happens in the middle of the night for us, just by nature of time zones and time differences. Is that something you found difficult? Like if you had loads of nights where you're up really late or all night waiting for something, or are you quite strict on yourself and you're like, no, it is what it is. I can only do what I can do.
I am now, but when I first, got into trading, I'd spend a few nights where I'd be in a highly risky move, let's just say, and and then you're into the Asian session. I mean, what I tend to focus on is just the New York session now. So that's for our time. That's 2:30 in the afternoon to like 9 o'clock at night, and that's a nice time actually to kind of work within. It's where the most volatility is, and then after that, you're into I think it's Australia comes in about 11 o'clock or 11:30 our time, and then you've got like Asia coming in at like I think Hong Kong's at like midnight, and then 1:30 is Japan. I can't remember which way around it is, but basically, each market opens up and finishes at a different time. But I only there's enough opportunity in New York alone without needing to kind of go into them ones. So I tend to try to not sleep on a trade if I can, because honestly, I'm not a good sleeper anyway. I've got 2 children. You know what that's like, Alice. It's difficult at the best of times. So it's like sleep's important. So I like to try to get me trades if I'm trading, in the New York session and be done and dusted. There's plenty of opportunities in that way anyway.
Yeah, no, that makes sense. When you've got 2 children, the last thing you need to be doing is trying to literally be like awake 24 hours to hit every single market.
Yeah.
So I think that's one of the benefits of trading crypto over, say, stocks, right? Is it is 24/7, so you can generally fit it in. As long as you're strict and like on which markets you're sort of following, you can fit it into your schedule.
Yeah, definitely. Of course, the other thing on this as well is understanding fundamentals. FOMC plays a massive role in what goes on price. So you've got to follow what's going on with all of the financial or economic news, and that's key because there's a lot of manipulation that goes on there as well, by the way. But I'll tell you what's interesting. So I was on YouTube. I started like a YouTube channel. That was okay, not great. And then obviously I went into TikTok because MSol, a good chap in the MDB, he said maybe you should start and do some TikToks and stuff like that. So what's really opened my eyes to the fact that majority of people are stuck in this kind of patternistic game where it's just relatively new and stuff like that. The amount of just DMs I get on TikTok asking about like, how do you know where liquidity is? How are you finding this and stuff like that? And there's no black magic to this. It's not like but it's a massive. There's loads of people who just don't understand trading, and I think the way the markets are geared up towards is everyone is, and I don't want to harp on about this, but it's geared up to kind of flush out new traders, get them down and disheartened, and then they leave. There's that stat like 95% of traders lose effectively because the 5% they're just rotating, and the attrition rate of coming in and going out is just really high. So, really, what I try to do with Apex Trades is just to try and educate all of what I'm kind of talking about now for that purpose, just because I think I'm at a point where I know. Well, number one, I know manipulation goes on anyway, but number two, I think I'm at a point where I can spot where that manipulation is, and I've got the tools to kind of demonstrate and show, how to mitigate and how to kind of not be someone else's extra liquidity. So that's really why I wanted to do the Apex Trades thing, and I kind of, it's good gratification when you get these messages on the likes of TikTok and stuff. And interestingly enough, it's a really young demographic as well, and I don't know if that's symptomatic of the way the different platforms work, because you've got YouTube, which seems to be a much more mature kind of platform. And TikTok is like all the young boys and girls who are coming out and like, I want to be a trader. I want to let all that kind of stuff. And it's the same thing, same again. Aim for the same kind of ways and stuff like that on the way patterns work. So I'm just here to educate, Alice. Do you know what I mean?
Yeah, no, absolutely. And education for me is absolutely key. I think not just in trading, in finance. I literally was saying to Danny yesterday, I find it so frustrating that we are not educated like in the most basic financial things at school.
Honest, it's crazy.
You know how many people I know who don't understand like interest rates? They don't understand inflation. They don't understand that You know, selling your house and moving comes with all of these extra costs because of inflation and interest rates, and their mortgage, you know, on the same price house isn't going to be the same amount every month. And they don't understand savings, and like there's
no financial education. It
isn't. And I think that's from what I've gathered from the likes of TikTok and YouTube and Twitter especially, that seems to be quite a global thing. I think, you know, the UK aren't alone in not necessarily educating, you know, the youth on real finance. I mean, obviously we do maths, but it's not.
It's massive, isn't it? You know, we all, you know, you remember what it was like. You leave school, and like you think, oh, okay, well, what am I going to go and do now? And then no one really prepares you for. You've got things to pay for, bills to pay, and all that kind of stuff. And then understanding, well, what happens when I'm, you know, 55, 60 or whatever, and I'm leaving my job? What about pensions? No one really tells you, you know, prepare yourself for what's coming down that line. And you don't learn none of that in school. We're lucky. I think this is one of the big things for the whole space that we operate in. You have to force yourself to learn this stuff. And not because you're forced to, but actually because you want to, and you need to understand why it's important. And so we're lucky in that sense. But there's loads of people who probably won't even know what DeFi stands for or what it is and stuff like that. And it's like, you know, they'll probably never get educated well enough to understand how to manage money and what it means. And that's an indictment actually of the educational system. Really, it should be on the curriculum, I think.
Absolutely.
Level.
Yeah, it should. I mean, I wouldn't consider myself like financially literate until I was maybe in my late 20s. And that is crazy. Like I managed to buy my first house at 22. And that wasn't because I was financially literate. That is just because I just worked and saved. I didn't understand actually how mortgages really worked or how my monthly payment would be calculated. I just knew if I saved up a big enough deposit, eventually I'd be able to buy a house. And it was a tiny little house, but it was my house and I was happy with it. But I think had I had the understanding of finances that I did now, I would have thought about that whole process differently. I sold that house on quite quickly, and I probably wouldn't have actually done that if I'd understood finance in like a bigger picture. And there's loads of stuff. I do think that, like you say, with like TikTok and stuff, I do think those coming out of like uni and education now, because of how accessible everything is, hopefully we'll have a bit more knowledge than we perhaps did at the same age.
I also think as well, you know, like I think of, you know, my children and stuff like that, about what it'll be like when they kind of get, you know, to an age where they're leaving school and stuff. And I don't know about you, but it feels like this undercurrent of a different way of working. Like at least me anyway, kind of, you know, you had regular stuff, you leave school, you get a job. Okay, it might be a decent job and you get a career in that, but it's just the one job. That's how I earn money, unless I'm savvy and I invest or whatever. But now there's just so many opportunities to earn money in different ways. You know, they call them side hustles, right? But it's just there's always something new, some other idea about how to kind of do it. And I kind of feel, you know, Patrick said on I think it was Patrick actually on the previous podcast, which I thought was brilliant, by the way. You know, effectively you're trading your time each time for money. You know, that's the currency. It's time, isn't it? And it's like, with so many different ways to be employed, you know, whether it's content creating, whether it's, you know, some sort of side hustle, not saying drop shipping, but, you know, that was like a big thing and crazy back then.
Yeah.
But there's lots of ways in which you can build up a little business quite early on if you're savvy enough. And I don't know, it feels like that's where we're starting to go now in this kind of social state, where probably too late for the likes of me and whatever else. But I think, obviously, you were an influencer, so you probably can speak more articulate on this than me. But it feels like that's kind of going to be a genuine career path where people can start something and then use it to their advantage by gaining followers and, you know, doing, you know, selling things and whatever else. But I think it's a cool way of doing stuff entrepreneurial. You know what I mean?
Yeah. Oh, do you know? And it's changed the face of marketing, because anyone can market with social media. Anybody can put themselves into the public domain, especially with like TikTok, how the algorithm on TikTok is working, and it's changed Instagram, Facebook, YouTube, everyone is trying to imitate TikTok basically with their algorithm. And you know, you don't need a big marketing brand really to launch a product. The most successful sort of startups at the minute are the ones who have found fame, for lack of a better word, through social media. And it's crazy. And anyone can do that. Anyone can get their phone or a camera and film something, you know?
Yeah, it's crazy. So, if you're popular, you know, just start wearing some items, you know, demonstrate a few Amazon products and just sell them. You make a fortune.
And like when my following originally grew, that was back in 2016, and completely by accident, and actually started as like an interior like sort of account, so people would follow it for interior ideas, and all that was a young me decorating my house how I liked it, and by chance some other people liked it too. Like it was never intentional. Like
it's an idea thing, isn't it? Though people like that, you want to know how to do unique things to the home improvements. My wife does a lot of that. She follows loads of these like Stacey Solomon's, massive, you know, as an example. She does a lot. She kind of watches her a lot and stuff. So if you get it right, it's a platform, isn't it?
Yeah, it's really interesting. Completely gone off track there, but interesting fact nonetheless. Cool. So let's just cover our last few questions. We have been going a while. So I'm curious to know, what sort of skills or personality traits do you think lend themselves to trading, and why?
That's a really good question. That I can only speak for myself on this. I've got a very impulsive nature. I don't think that's a good trait to have, because I'm very much a risk taker. I always have been. If there was one trait I didn't want to have, it would be that. Because you need to have a really cool. You kind of. I think the best traders are the ones that don't get super excited when they win an awful lot, or they don't say win, but they profit an awful lot. But they also don't get super down if they lose as well. You know, it's having that kind of real cool way about you, of like it's only money kind of thing. And I'm being able to stay calm a lot of the time, right? And again, just to kind of talk about this. The best traders are the ones that are able to catch a reversal. But the problem with that is, if you think price is continuously going down, you're thinking, right, I'm going to long now. I'm going to go against what everyone else is doing. It's like, that's just, it's uncommon. It's like you're doing the opposite to everyone else. And that's how you get profitable in trading. You try to wait for the price to get to a point where maybe it's soaked up liquidity and get to the other side. So that's a skill. I mean, that takes bottle. It takes a bit of commitment in your head, that you think, okay, well, this is what I'm going to do. You set obviously good risk parameters. So that skill set is a good character trait. But equally, being able to stay calm under pressure, because it is very much a psychological and an emotional battle every time you trade. And you, again, like I said before, you should not get into trading unless you're willing to make a commitment. This isn't a half-assed thing where you just say, oh, I'm just going to throw a few quid in it. Trust me, you'll be someone's liquidity. Can't go at it like that. You've got to think about this as a lifelong journey, like you would do, like you're picking up an instrument to learn how to play the guitar and to become better. 10,000 hours, they say, don't need to learn a new skill. That's the kind of mentality you need to have if you're approaching this kind of thing. Otherwise, don't get upset when you end up with, liquidators and whatnot.
Yeah, I think, remaining cool under pressure must be a huge one. I think one thing you see with traders a lot, and I feel like this is all traders, I just think more experienced ones probably get a little bit better at handling it. But I think you see these emotional trades. Yeah, and I think that plays into like this FOMO and this greed that you were talking about. And I think, that's a massive one. And if you can look past that and remain calm and cool and, think with your head and not your heart, basically, I think that would really help you as a trader. And do you have any tips for traders who are perhaps still emotionally trading a little bit, how to get past it? Or
I think, look, win, lose or draw, it's always a good idea to, whether you'd have a big win, in fact, even more so if you'd have a big win and, a decent run, is to take a day off, let that win absorb or the loss. Yeah, because it's difficult to take if it's a loss, but if it's a win, don't it's very easy to feel high as a kite, and then you're jumping straight in thinking you're going to get the next one and stuff like that. But let that absorb. Another thing I think is a really good thing to do is just again to manage your emotions is have a set balance. So let's say $5,000 is your balance, right?
Mm-hmm.
And you use your $5,000, and let's say you day one you win like $500, so you're $500 up. Take that $500 and put it into a separate account. So you're only ever trading with your $5,000, and then if you lose, you put it back in. So you're always starting each day with the same balance. That keeps you grounded a little bit. So it's like you don't touch what you're winning or losing. You just kind of adding or taking from it. Just means that when you start, it doesn't feel like, okay, if you keep compounding and you get from 5,000 to 50,000, and then you're trading with $50,000, a loss on that feels like really excessive. But if you keep taking whatever you win and just put it in a separate account as like they're your wins, and you're always resetting that balance to 5,000, that's some really good advice. I'll tell you who gave me that advice actually. It was Patrick. It's two ticks in the box, because he had a really good idea about just using that same balance as a way to stay grounded each day. Win, lose or draw, he will either add to it if he's had a losing day, or he'll take it away if he's had a winning day. And I think that's really sound advice.
Yeah, no, I completely agree. I think, like I say, for me, I've got such a low risk profile anyway. Like anything, even I think, $5 above what I'd put in, I would take out as like a win, like, yay, $5, whatever. So that's definitely sound advice. And I think actually having a set amount like that probably makes it easy to look at it objectively, I suppose.
Yeah, and calculate as well, because it becomes second nature in terms of the numbers and stuff.
Yeah, definitely. Yeah, of course, that makes sense as well. Cool. So one last question. This one's completely off topic, but I ask it for everybody. Who would you say your biggest 3 inspirations are? So it can be anyone. It can be a celebrity. It can be family. It can be someone in the industry. Who are 3 people that inspire you, and why?
Oh, God.
Hard question. I love it, because everyone I ask suddenly is like, oh my God, I don't know how to answer this.
Yeah. It's difficult, this. My wife's solid. Whether I'm down, whether I'm up, she'll keep me grounded. I think it's one I would probably definitely say. She's a big inspiration. She's a really good mum as well, which is amazing to me 2 kids. I think that's one for sure. Who else? How long did you want this podcast to go on?
Here for how minutes?
I took a lot from. I spent a lot of time watching Jordan Peterson. I don't want to kind of split hairs here on people's opinions, but I liked a lot of what he was saying, and kind of how he dissects the world. Specifically in the demographic, kind of young men who are struggling and whatnot mentally and whatever else. And I thought he was quite inspiring at one point, until he got a little bit kind of famous and stuff like that. So that he was quite an inspiration, I think. And then who else would I say? When I asked you what questions you were going to ask me, this was definitely not on the roster.
This is going to put people on the spot. This is there to do that. Add a personal touch to the podcast, right? Let people get to know you.
Yeah. I want to make sure to give an accurate answer, so I've got to think a little bit. There was one guy, right, actually, when I was an apprentice, a chap named Chris Lyons, and he was an engineer, and I used to love it because he, like, when you're learning, I always think this, it's very easy to just give someone an answer, and then, never learn that way. You're just giving the answer like learning a song, you just copy someone else. But like, he used to really take the time for me to figure stuff out, and he'd just give me little tips, and it it was like 16, 17 at an age when it's like, everything goes on at that age anyway. But like, he used to keep me grounded, in the sense that I always wanted to impress him, always want to do well, because he'd take the time with me to kind of show me how to do fixing boilers, fixing air conditioning units, all that kind of stuff. But that was a big inspiration for me at the time, because he was a lovely fella, really nice to get on with, but actually, you don't get this a lot. Would take the time to show you things and explain how things operate and how they work. So not, more of a personal one to me, but he was an engineer. I don't even know if he's still around nowadays. It was such a long time ago, but yeah, he was a big influence on my earlier life, for me to be successful in real life world.
Yeah.
Obviously from doing that, went on to do lots of good stuff, and kind of a director of operations in a company now, and all of that. When you're young, there's so many things that can steer you off guard on that thing. So he definitely was a big inspiration on me, I'd say.
Yeah, no, that's a great one. What was your apprenticeship in?
Air conditioning and refrigeration, and then I've done another one in heating and ventilation as well. So kind of a more around kind of main buildings. I then went into smart buildings, so a lot of it's kind of how to make buildings intelligent and energy efficient and up the EPC ratings, these like energy certificates.
Yeah, cool, interesting. Well, thank you for joining me today. It's been great actually, because like I say, I am a complete noob around trading, so I definitely learned some things today, and I'm actually going to go and check out, I've got them saved in my browser already, the 3 chart software website things you said, so I'm going to go and have a little bit of a nose and see if I can figure my way out around them, sort of thing. So yeah.
Fantastic. Well, thank you very much for having me, and it was a pleasure.
Cool. And for everyone who wants to find out more about Apex Trades, I'll pop a link in the description for you as well. So if you do want to learn about trading, you can head over and have a look.
Thanks, Alice.
Bye.
Bye.